Hang Seng and Taiwanese index, as you can see, are down anywhere between 0.2% to 2%.
The levels to watch, the 200-day moving average and the 200-day exponential moving average, which are placed at 16,800 to 17,000.
I don't think the Nifty will come down.
Morgan Stanley is the bull who has an overweight rating, target price of 225 per share.
First rates are in. The Nifty is down about 162 points.
Trend in the central banks are trying to achieve is bring the demand down to the level of the current supply curve so that we bring prices in control.
I do have some concerns about growth. I think we are taking growth a little bit for granted, and I don't think we should, at least at this stage.
We are confident of growing this margin, taking it forward.
The Nifty is still down about 1,000 points from the highs that we hit on September 15, which is closer to that 18,100 mark.
Dollar go to fresh 20-year highs, 114, and US bond yields went up to almost 3.8 on the 10-year and 4.2 on the 2-year.
Crude oil prices, the decline has been much sharper. We saw 5% of a cut on Friday, and we are down by nearly 1.5% to 2% even right now.
There has been a near 100-point recovery from the day's low.
Good afternoon and welcome to Closing Bell. I am Anuj, with me Prashant and Nigel, and actually the recovery has now become a bit bigger now on the Nifty from the lows, which was sub 17,000. We are now at 17,130. But essentially what's happened today is a bit of an algo trade which has played out, which is the currency trade. The dollar rupee has been the key about that, and IT is strong while financials are weak. And IT is strong despite actually globally IT being in such a bear market, and India included. But today the rupees move towards 82 has clearly helped that. The other thing which stands out is that there's been a lot of money which has been taken off the table in some of the outperforming stocks. Autos is a case in point, defense is another, manufacturing. There are so many individual sectors, and the market breadth is very poor at 1:10. Now what's happened today is that the market had a big decline, and right at the 200-day moving average, some buying has come in and the market's off. It will be interesting to see if we have a second test of the 200-day moving average. That normally happens, maybe not today, but over the next couple of days, and whether that is successful or not. Gentlemen, hi, good afternoon.
Anuj, hi, Nigel, hi. No, absolutely. I mean, I think a bit of reversal and just, a little bit of catch up on the way down with the rest of the world. Just last week, once again, global markets were down. If you take a look at the MSCI World Index, the broadest gauge of global markets, it was down 5% for the week, while the market here was down very small. And this is just 1 week. I mean, as we've been saying, extend the time horizons, and it becomes even starker. So a little bit of catch up, and of course, I mean, you got a little bit of this and a little bit of that. IT financials, Anuj spoke about. We'll discuss what's happening, but to my mind, I mean, not very much special, just a bit of catch up on the way down. Nigel, hi.
Well, good afternoon, gentlemen. In the morning, even I was looking at the data points and hearing what you all had to say at around 8 a.m. I got an interesting query from a viewer. They said, what's happening? Prashant is in a little bit of green, Anuj is red. They said, we're a little bit confused on that front. I said, I didn't even think about it. We're looking at the data points, but I guess the 200 DMA is something that both of them are looking at. And I guess from around there is when we got that bounce. So
I thought that will come up. In the morning I was thinking that, Prashant was wearing a green tie and I was wearing red. I thought that will come up.
True story.
I'll tell you the true story. The reason is I ran out of shirts. So that's the
All right. Well, last 60 minutes coming up. Let's see whether or not we can get closer towards the green terrain, or in fact, we dwindle down towards the 200 DMA. First up, let's run you through what we have lined up on the show for you. The market sell-off intensifies. All key indices slide while mid-caps fall the most. The Nifty IT is the only index that's trading in the green. The rupee plunges fresh lows while the US yield spike yanks up Indian bond yields to 3-month highs. Latest updates coming in from the currency market in just a bit. And Andrew Holland, Chief Executive Officer at Adventis Alternate Strategies, will be joining us to discuss his view on the markets. Finally, we'll also be joined by Alpha Manager of the Day, Shibani Sirkar-Kurian of Kotak Mahindra AMC, to discuss her top portfolio bets.
Okay, but first up, as always, how should you position yourself in this last hour of trade? We have Mitesh Thakkar joining us for that. Mitesh, hi, good afternoon. So, big decline, but there's been some decent recoveries from the 200 DMA. Your thoughts on index and your stock calls?
Good afternoon, Anuj. I think that was a level which I was highlighting in the morning that, that's possibly an area where you would want to cover your shorts and then at least partly and then, trail your stop loss very tight to the current market price. I think that bounce back has happened. My worry is that the structure hasn't improved despite the bounce back. I think, one, you have the gap which was created today morning still remaining over there. Most of the intraday indicators are still trending on the south side. So which means that, eventually if there will be bounces, they'll get sold into. So the idea is that now either you want to go short afresh once we break today's low, which is the 200 average, or you get closer to about 17,350, 400 zone. And I think that's an area where I would be aggressive in shorting slightly. But till then, I think you're trading with some stock-specific biases. I have a buy on UBL that's showing a good pattern on the daily and the hourly charts. So keep a stop below 1650 here, look for targets of 1720. And a sell on Godrej Consumer, which is breaking down. That's a sell with a stop just placed just above levels of 887 and look for targets of around 850 to about 845 on the downside.
Okay, all right. By the way, there's some massive news that's coming for you on the screen. We're getting some clarification on Power Grid. The Finance Ministry has said that that there's no proposal of Power Grid buying PFC stake in REC. Remember, this was the big overhang for the last couple of days. So as of now, that's what we're getting. And the Power Ministry will clarify on this shortly. Remember, a couple of brokerages, they were getting a little bit skittish because otherwise, Power Grid management has been more or less independent. There's going to be huge cash outflow if that happens, which could reduce their dividend yield. And it's an unrelated business. So because of that clarification that's coming in there, we're seeing a bit of a bounce from the low point of the day. Just to update our viewers, in the last two trading sessions, I think the stock has lost close to around 20% of the market cap. Today's day's low as well was less than 190 rupees. Now it's seeing a bit of a bounce post that clarification. We'll have to wait by to see how this one develops. But for the time being, the street is taking that very, very positively on the back of this clarification that's coming in there from the Finance Minister. I guess that's the reason why the stock has almost moved into the green, actually. Big bounce is what we're seeing in the last few minutes.
Low today was 186, which was made, I mean, it was a gap, that was the gap up low along with the broader market. And it had come up quite sharply to about 195, and now it's come into the green. So, yeah. That's a big bounce, big sort of reversal that we've had with this clarification, which is now coming through. So clarity now, at least, this fear is out of the window. Dilip Bhatt is with us, Joint Managing Director at Prabhudas Traders. Dilip, great to have you with us here. Thank you very much. Any thoughts on Power Grid, if you want to offer? Or tell us a little bit about what you think market levels we are going to see. The mood has soured a little bit here in India as well. Do you think the sort of much seen bounce will appear and the market kind of ignores what's happening globally, or this time we are headed into a bit of a rough patch? What's your sense?
Good afternoon, Prashant. I think a couple of things. First, on Power Grid, I think at the end of it, on an Excel sheet, one can say that it's going to impact Power Grid so much, or it may not impact so much. And that is why the price has got corrected. But I think the larger message out over here is that will the PSUs continue to be a hostage to the whims and fancies of the bureaucrats? I think that is the much bigger story to be answered. And that happens time and again when we talk about PSUs, particularly when the PSUs are looking so good. We must say that this government has done everything possible to build a very strong confidence in the PSUs. So I think that should not be frittered away by some bureaucrat taking a decision here and there. And one should be a little more careful on that front. I think that is the much larger message on what's happening in Power Grid or PFC or REC. Coming to the markets, I think as what you very rightly say, it's the dollar index vis-a-vis the rupee depreciation, vis-a-vis the interest rates. I think all these are really playing havoc, and one doesn't really know where it's going to settle. I think too many moving parts, too many things in a flux. So I think all that is really playing out. And at a time when Indian markets on a relative basis are expensive and not very cheap, to put it a little more in a better way. So I think all that is certainly going to have its impact on the markets. And I think possibly we will be a part of that itself without any doubt. I'm sorry.
Oh, that's fine. All right, we'll come back to you, Dilip, once you get that sorted out. By the way, for the time being, a little bit of a bounce is what we saw on the index. But still, we are seeing supply at higher levels. In the past 1 hour or so, Power Grid, obviously, that's the stock that's seen a bit of an uptake. And Ultratech Cement as well. From the day's low, remember, that's been under some pressure on fears that now you have a larger competitor that's coming into the markets. Well, Ultratech Cement as well has recovered a goodish bit from the low point of the day. On the day that the Nifty is down more than 230 points, you have a stock that's up 1.5%. I guess there is some bottom fishing out there. But let's focus on the money markets. The rupee has fallen to a fresh low, while the 10-year yield has touched the highest we've seen in the past 3 months. Lata joins in to run us through more details on that front. Lata?
Clearly, the pound going to a fresh 37-year low and those unexpected tax cuts was the fresh negative over the weekend. Dollar going to 114 and US yields at 3.79 on the 10-year and 4.2 on the 2-year. These large global funds, for them, it immediately means taking off money from EM currencies because the risk-free return is coming in at 4.2 in the 2-year. There's no currency risk over there. And here, the interest rates are not matching, more because of the losses on the currencies. And of course, all Asian currencies saw that impact. And the NDF market already moved over the weekend. So early morning, we were merely correcting to all this. Dealers tell us that it isn't as if FIIs have come in and bought dollars because they have sold off shares, nor is it that importers are coming and panicking and buying because they may not get at 81, they have to pay 82. Nothing like that. It's not real economy moves. It's clearly these large funds which move across countries which have been responsible for the recent fall. They'll really watch RBI, and RBI will be watching the funds, actually. If there is exit from the market, then the Reserve Bank perhaps will let go a little bit more. Because beyond a point, when the reserves start going 550, 525, billion dollars, there is also a psychological impact. Depreciation begets depreciation. The market is now only watching RBI to find out where RBI puts the next big stop. And then perhaps exporters will come and sell. They usually do sell, actually, in the last week of the month. So now everyone's believing that there perhaps will be a catching of the breath between 81.5 and 82. But of course, global factors can have a different design. The bond markets also bear watching. Like I told you, the big movement is actually the yield movement. This 3.79 on the 10-year in the US and 4.2 on its 2-year has led to Indian bond yields being yanked up, despite the fact that crude is actually to our advantage. Now, the OIS market, overnight index swap market, it's a very swift market. That one is already priced to 50 basis hike, and a 50 basis hike on a Friday, that is. And if you look at the 1-year OIS, it is pricing in something like 6.9, 6.95, which means, a repo of a peak rate of even 6.75 in keeping with the higher Fed rate is getting priced in by the market. All these are, of course, position taking. We have to wait and see. But from a stock market angle, what you need to know is now the 10-year yield, as we approach September 30, is higher than what it was on June 30th. So banks, while they were benefiting from the upper interest rate cycle, are now sitting on mark-to-market losses. That is the big thing every bond desk tells us. Oh, we are sitting on losses when it comes to the quarter. So that's something of interest to the markets.
Okay, thanks, Lata, for that. Dilip Bhatt is still with us. Dilip, good afternoon. So, what we have here is a bit of a decline in financials, while some of the IT stocks are doing well. But overall trend is actually on the opposite side. Financials have been doing well and IT has been seeing a big decline. Your view on how to approach the two big ones?
Well, I think, let me take the IT first. I think the major concern about the decline in the volume growth, that is what is being expected, and the recession that the IT industry might face because the BFSI out over there is going to cut on the cost, cut on the expenditure, which might impact the IT directly. But I think a large part of that, in my opinion, is played out. I think IT really is getting a solid tailwind by way of a rupee depreciation, which will provide them with a good resilience. So as far as IT is concerned, I think it will continue to, for us from the current levels, I think one should look at it from a slightly longer term perspective. And I think some of these companies too are very well managed. If you see the kind of free cash that they're generating and the kind of buybacks they do, So I think all said and done, IT from the current level on the risk return basis, the returns appear to outweigh the risks from the current level. And it certainly merits a look and buy on a slightly longer term basis. And I would say both the front line and the mid caps too. So I think as far as IT is concerned, that is very clear. As far as banking is concerned, yes, of course, there will be a book loss or a notional loss as far as the bond yields are concerned, which will the mark to market is going to impact them. But all said and done, I think the banks too are very well positioned in terms of their NPAs and in terms of the deposit growth rates. So I think, and the credit growth also has been reasonably good. Maybe a large part of that is coming because of the oil factor. And that is why possibly the credit growth, maybe optically a part of it looks pretty high. But all said and done, I think from the current levels, banking can perform pretty well. And I think the financials will continue to do well. We'll see better NIMs and I think better credit growths. And also, I think what can possibly lead this to a better ROAs of some of these banks. So I think banks also certainly deserve a look, especially the front line and select PSs.
Dilip, any thoughts on Canfin Homes? Our colleague Abhishek is pointing out it's lost now 25% in 6 sessions flat. The news, of course, was with regards to the abrupt change in top management. But there was an all-branch audit which was done, and that didn't kind of throw out any nasty surprises. The amounts were very small in terms of what would be the ultimate loss. The market seems to be fearing that there is more, which it does not know about. Any thoughts at all on this one?
No, not really, because I did not get to the bottom of what really happened out over there for the change of the management. But I think this was always a very prime candidate for some of the private sector to take this over. And I think last time too, we saw that there were very good bidders for this particular company. And purely from that angle, I think there was no negative surprise that was being thrown out as far as the due diligence was concerned, what I can recollect. So maybe I would take it more as a one-off kind of event, if at all there is something. But otherwise, I think from these levels, apart from being a corporate event or one-off kind of an event or an aberration as what I would like to call it, Canfin certainly deserves a look.
Okay, Canfin certainly deserves a look. By the way, there's another sort of leg down which is happening in the market right now, and financials are really weak. The bank nifty still down about 840 points, and I mean, if you look at what's happened to the market breadth today, it's been very weak. I mean, 1:10 on the market breadth, and a couple of stocks which stand out in weakness. ICICI Bank, for example. The recent outperformers, Maruti Suzuki, Adani Ports, Tata Motors, look at ACC, all these stocks. ITC from the recent high, 2 days back it was 350, the high, and from 350 down to 334. So there's a lot of stocks where you're seeing big decline. Dilip, we'll thank you on that note today. Thanks a lot for joining us. Good talking to you as always. We'll take a break. Up next, we'll discuss more on the market with Andrew Holland, Chief Executive Officer of Avendus Alternate Strategies. And our alpha manager for the day is Shivani Srikar Kurian. She'll be joining us from Kotak, of course, to discuss her market outlook. Welcome back. Well, the market's been very volatile, and of course, the genesis of this move is in the currency market and what's happening with the dollar. Let's actually ask Andrew Holland, who's the Chief Executive Officer at Avendus Alternate Strategies, of what he's making of the current market scenario. Andrew, hi, good afternoon. This sort of is bringing back some memories, right, of the 2007-8 phase. Does it look like it could be headed that way, or are we going to get away easily, and would this be a buying opportunity? I mean, how are you approaching the current phase of the market, the global risk off that we are seeing?
Yeah, I mean, we talked about this last time, Anuj, in terms of, we getting to that point when everyone was saying, we're kind of, moving away from what's happening globally, which was last heard in 2007, wasn't it? And whether that was the case this time around. It's simple, right? It's like, when you're crossing a very busy road, do you wait for the red signal, or do you try and cross, with your own risk without getting knocked over? I think that's where we are. There's so many risks out there that it's just worth just taking a few and saying, I'm going to let some of these play out. I mean, what's happening in Europe is very scary. And that's where the problems could really arise from. But I haven't gone, to the Fed yet. The Fed, the change in language that I heard was that we're now going to wait for, employment data to come back into favor. Now that takes time. Even with the higher interest rates, that will take time. Inflation might show a bit quicker, but the jobs data will take time, and that's what's spooking the markets. It's higher for longer because of just being completely reliant on data and making the same mistakes on the way down in terms of the economy as they did on the way up.
That traffic signal example is interesting. Andrew, hi, good afternoon. So are we going to be lower for longer here? You said higher for longer. I meant higher for longer. Because that's not how it's played out here. Things have come back very, very swiftly each time. Yeah, go on.
So here's where it is that when I was saying higher for longer, I meant that they're keeping rates lower and not addressing liquidity. It was still expanding, and the tightness in the labour market was there. So they're coming in very late, and they're still data dependent. So it could only be one or two things, right? You've had expectations of a kind of pivot going away. So higher rates. That's the first kind of not shock to the market, but against what the market was hoping for. Second is it's going to be probably longer than the market expected, and therefore earnings still have to be downgraded, and that's the next leg. And I still think the market's trying to grapple with that point as well. So it's going to affect us because the risk-off sentiment is going to be there globally. And if you just look what's happening in the currency markets, it's telling you everything you need to know. So the unintended consequences of higher rates is what the market's getting nervous about now.
Hi, Andrew, you're clearly sounding a little bit cautious, particularly in the near term. But in the past, you've been fairly positive on a couple of sectors, namely FMCG and telecom. If we're going to go into a phase where we get into a bit of a tizzy, then will there be sectors that you'll be looking to chip into?
These are the only two sectors I'd be hiding in at the moment. I think everything else, will have that rotational trade if markets were to pick up, for example. But it's clear to me that, whilst a traditional sector like IT was a good place to hide in, its correlation with NASDAQ is still too high for my liking. Therefore, sentiments against NASDAQ, and there's some scary kind of notes going around about charts and where it could drop over the next 6 to 9 months. You can't walk up that down escalator. That sentiment's going to hit the IT sector for sure, because if tech is going down, the economy is going down, and banks are going to have a problem and therefore cut spending. So it's a very simple equation.
Okay. What about autos and some of the other FMCG names, Andrew, which were doing so well, and it looked like finally things were coming back for them. Commodity prices were cooling off, supply issues were easing, domestic demand was picking up. Your thoughts here?
Yeah, no, Anuj, if you remember many months back, we talked about a potential deflation trade, and that played out in July, August, which was really good for the autos and the banking sector. But that's played out now, and therefore we go back to the fact that yes, these are tailwinds for the auto sector. It will play through, but of course you've got some profits to be taken off the table. So that's what investors will do in the very short term, because elsewhere they're probably nursing a loss somewhere. So that's That's what happens. And until we get to that point where, people are not quite throwing in the towel, but we're getting there, is probably where it's probably, likely to be these sectors will start to perform again. But at the moment, I would have thought that most investors will see these sectors, even though they like them and I like them, as being areas to take money off the table.
Andrew, sorry, did you mention a broad level around which you think market can get to in this leg? I missed that.
No, I didn't mention a broad level, but I think
you have a level in mind. I mean, broadly, what is this going to amount to, according to you?
See, I would say this, Prashant, and I'm thinking more globally, because I'm less worried about India. I really am, but I just don't think we can, kind of move away from what's happening globally in these kind of risk-off trades. Let's say I think the S&P could fall anywhere between another 5 to 10% from here over the course of the next few months. I think our fall would be half of that. So we'll still relatively do better, but we can't just escape that.
Andrew, so going by what you're saying, you believe that June 2022 lows will hold out, because we're a good 10% away from those levels. Is that correct? At least as of now, with the data points that we have, that 15,100 odd on the Nifty should hold out, right?
Yeah, I think anything towards that 16,000 level is when you should really start deploying whatever cash you've saved at that time. Would be the time I'd be looking a lot more aggressively about deploying funds. At this point, given all the moving parts, it's just tough to kind of get that timing for the next leg up, and I don't think the next leg up is coming very quickly.
Okay, well, some of the outperformers are also beginning to fall now, the likes of Bharti Airtel. Now, Andrew, the other point is what's happening to China, because a lot of people believe that because there are a lot of funds which operate in just two markets, China and India, and the Chinese market being such a big underperformer compared to India, a lot of funds will move from China to India, some of which may have already happened. Do you reckon that's how it could play out?
So it depends on when you think interest rates are going to, when the Fed and other central banks around the world will kind of, decide that enough is enough and the economy is too weak. Then let's say that's some months away. I think once that happens, everyone will look for where the growth is, and that's definitely coming from India. But if you're looking at a global recovery at some point, then you've got to look at the exporting countries within emerging markets. So you can't ignore China, you just can't do it. So I suspect we'll get the flow of funds first, and then gradually that any kind of new funds will probably go towards some of the exporting emerging markets like Korea and China.
All right, Andrew, thank you very much. Great speaking with you. Appreciate you joining in.
Thank you.
With that perspective. Well, 271 points lower. We're at 17,055 at this point in time. We have Shibani Sarkar Courier now joining us to take some questions on market. She's Senior Executive Vice President and Head of Equity Research at Kotak Mahindra Asset Management Company. The folks at Kotak have also been cautious for a while. Shibani, thank you for joining in. What are your thoughts now?
Hi, good afternoon.
It's just, the thing which has happened is that the rupee against the dollar is started to the dollar INR is starting to float higher, which was not the case. 80 was very well defended, but now I guess it's not the case. It's finding its own level with the dollar being very, very strong against most currencies. Is that the primary driver over the last couple of days that we're seeing, Shibani? How are you thinking about this leg down that we are seeing and some believe are just about starting?
Yeah, hi, Prashant. If you look at clearly what's happened over the last few weeks is that it's now clear from a monetary policy perspective, the developed markets, including the US, would focus more in terms of taming inflation, possibly even at the cost of growth. When there is a global risk of sentiment in that sort of a scenario, the dollar does strengthen, and that's something that we have seen happening. With India, of course, as you correctly mentioned, the currency had been extremely stable, and some of it is reflected in the fact that our forex reserves have come down over the last few months, reflecting the fact that central bank has been focusing on maintaining currency stability. Now, when you look at India macros, there are a few key factors that we would need to look at, and that would have a bearing on the market. Firstly, in terms of domestic growth, growth has been fairly resilient, even though we have seen some amount of consensus growth estimates being moderated. But on a relative basis, we are still fine. In terms of earnings, again, the earnings upgrade cycle is clearly behind us, and there has been some downtick in earnings. But again, the downtick has been slightly, it's been fairly manageable. It's not been significant. And we believe that in the medium term, mid-teen sort of an earnings growth is possible with operating leverage really playing out. I think the key factor for India is valuations. And of course, with the sharp outperformance that you have seen over the last few months, valuations, both absolute as well as relative, have moved up. If you look at India's valuation premium to the emerging market context, that is trading at all-time high levels. And therefore, with so much of global macro headwinds at play, it is possible that we could see some amount of volatility or consolidation in the markets that we are witnessing at this point in time. In the medium term, the growth equation for India, as well as the earnings growth story and the return on equity story, remains fairly intact. Therefore, we will have to possibly contend with near-term volatility. And, as we have been saying, we believe that, from a company perspective or bottom-up stock picking perspective, some of this could provide an opportunity to look at.
All right. Hi, Shivani. Good afternoon. Good to speak to you as always. Well, and I think one of your NFOs as well had opened for subscription. Not such a bad time, right? If the markets are going to go into some turbulence, y'all could get better entry opportunities. What was the response? Did y'all see a good amount of interest?
Yes, we just concluded one of our NFOs, and I think from a response perspective, the response has been good. And as you said, that some amount of market volatility does provide an entry opportunity. We've been clearly looking at stocks from a medium-term perspective. What we are trying to identify are companies which are high-growth companies, companies gaining market share in their respective sectors, those with strong balance sheets and cash flows, but of course trading at reasonable valuations. And then in markets such as these, you do get opportunities to look at stocks from a bottom-up basis, and that's something that we will keep doing.
Okay, fair point. Well, the market is seeing one more leg down, and the Nifty is now down 325 points again. Like I was saying, the first test of the 200-day moving average is normally defended. There's a second test, which at times can be something which is a bigger test, and now once again back below the 17,000 mark. The 200-day exponential moving average is placed at 16,800, but this doesn't look like a market about moving averages. This is something else happening. Even on the bank Nifty, we're down about 1,000 points now. Shivani, hi, good afternoon. So one thing which has helped our market is the domestic liquidity. I mean, if it wasn't for it, this market would not have been at 17,000, would have been at perhaps 14,000, given the kind of FI selling and global risk off that we have. Do you think this money is here to stay and is going to keep providing support to the market or cushion to the market?
Yes, Anuj, hi, good afternoon. So absolutely, I think that's something that we have seen over the last year and a half, with domestic liquidity providing the support.
Oops.
Okay, I think we lost that line there. Just try and have her back, but I think some technical issue there. Markets, by the way, are down 340 points, which means this is, the newest leg down, and which is taking us almost back to the day's lowest point. Are we there yet? I think we should be. The low has been 16,978, and we're at 16,993. So yeah, I mean, 15, 20 points away. That's it. A remarkable change lower, and I think this started at 225, just about as we were starting the show. The market made this high, And I mean, in this leg, and this is all intraday, and of course, we've been going one way, which is southwards. Shivani is with us. Shivani, sorry, we lost you there. Please continue.
Yes, hi, sorry, I think there was a technical issue. But as I was mentioning, that from a retail perspective, I think the big factor which is providing the support is the SIP flows, which continue to remain fairly sticky. So while, of course, we will debate about what's happening on the FII side and whether FIIs will look at India as a separate asset class and whether FII money is back. But I think from a domestic perspective, clearly the factor that retail investment strategies have been fairly sticky. The SIP flows have been sticky, and that does provide some degree of comfort in a market which could see volatility.
All right, Shibani, y'all have been fairly positive on a domestic theme. That's the real estate, the housing theme as well. How do you play it? Do you play it directly? That's real estate companies, or do you believe you could go in with some ancillaries, the tiles, the other home products business, or maybe another way? A guest this morning was talking about playing it via the finance housing companies. Your take?
Yeah, yes, hi Nigel. So we have been positive on the real estate theme. So within the real estate space, the way we have played it is through a mix of owning the real estate developers as well as the home building segment. The home building segment is fairly large in terms of the number of categories that you can invest in. So cement, for instance, tiles, the pipe segment, consumer durables, all of this, which is essentially corollary to the real estate demand. The real estate story, we believe, remains fairly intact at this point in time. While there are concerns that with rising interest rates, you may see some impact on demand. But one must note that if you look at interest rates today on the home loan side, vis-a-vis where it was pre-COVID levels, we are still not so significantly far off, and therefore demand remains fairly intact. The sector itself has seen significant amount of consolidation, which bodes well from the health of the sector. Overall balance sheets have also improved. And we believe that as of now, with the inventory levels in the system coming down, the sector remains fairly well placed.
Okay, Shibani, we'll leave it there today. Thanks a lot for joining us. Good talking to you as always. Let's just look at the market once again. So 17,000, it looks like that is perhaps the zone which the bulls want to defend, because that's also the 200-day simple moving average, and about 200 points off that you have the exponential moving average also placed. The bank nifty is the one which is a bit of a worry point, because if you pull out a slightly longer chart of the bank nifty over the last 3 days or so, remember it was just last week that the Nifty bank actually hit an all-time high, and from that point on it's corrected about 8%. It's just in the last 4 trading sessions it's corrected 8% after hitting all-time high. The all-time high on the bank nifty was 41,840. I think we hit that last Tuesday. Last Monday or last Tuesday we hit that, and from that point on I've seen a big decline, and effortlessly we've lost about, at this point in time, 3,000 bank nifty points. It's just been remarkable the way that part of the market has turned. Whether it's just a short-term turn or just some excesses being flushed out, we'll find out, but for now there's a major risk off. We'll take a break. As always, up next, we'll get a check on what's happening in the dealing rooms with Nimesh in D Street Chatter, and the BTSC calls with Mitesh also lined up after this break. Welcome back. Time now for our segment D Street Chatter, where Nimesh will get us an insight into what's happening in the dealing rooms. As we speak, the Nifty is still trying to sort of support at 17,000. Second time it went below that, but has managed to come back. Nimesh, tell us, what have you picked up?
Hi, Anuj. So, again, the feedback is, while there is a bit of attempt to recover in the intradays, I believe today the most important data to watch will be the institutional flows. I'm seeing for 2 reasons. One, there is a feedback that some bit of domestic money is back at work, and one of the leading insurance companies was an active buyer into this trade. So the DI number will be important from that perspective. Even from an FI point of view, the feedback is that there is going to be a market at close basket buying at a leading FI desk. The number is not large, but I believe there is a lot of stocks where there's going to be basket buying in the last half an hour of trade. from a larger FI. So that's going to be important from an FI flow as well. In terms of sectors, again, today is another day where the high beta is under pressure. So financials, real estate, all the stocks are under pressure. And on the other end, there is some bit of buying back in the defensives like IT and Pharma. So that's playing out in the large cap IT and Pharma names. The volatility is going to be high because of the expiry this week. Also, there is going to be there is the RBI policy which will have an impact on the financials, so to speak. So that's something to watch out for this week. But today, I believe the institutional data will be very important to track because there is a sense of feedback that maybe some bit of domestic money as well as FI money was at work at lower levels.
Interesting one. 6 p.m. we should be getting that data point, Nimesh. But what about individual stocks? What buzz have you been picking up? I think Power Grid features on the list.
Hi, Nigel. So, a couple of interesting names on my list today. So, the first is UPL. That stock, well, it's under pressure today, but I believe, the last few days of fall is been used by some larger HNIs to accumulate this particular stock. And there is a strong buzz of a company looking to raise funds at the subsidiary level very soon. So, that's a trigger on UPL. The second stock is Power Grid. There was a clarification as well by CNBC-TV18 that there are the reports of they buying out REC stake is not true. And since that, you've seen a bit of recovery in that particular stock. But there has been buying interest back in Power Grid at these levels from the domestic funds. Also remember, this week there is going to be a CPSE rebalancing, and the biggest impact of the CPSE rebal will be on Power Grid on the buy side. So that's the reason why some bit of buying was back in Power Grid today. And the last stock is Sun Pharma. As I said, there is a bit of defensive buying now, and Sun Pharma stands out purely on back of strong flows at a leading FI desk. And so the delivery volumes are going to be quite high in Sun Pharma today.
Okay, thanks for that, Nimesh. So some buying in Sun Pharma and Power Grid and UPL as well. Mitesh is back with us for BTST calls. Mitesh, it looks like 17,000 is that very weak support. It's being tested. It's been tested twice already. You reckon it will hold or go? And what would be your stock calls now?
Anuj, I think that's a tricky question because that's the 200 average area also. Typically, you might close around right at the 200 average and tomorrow see a gap of opening. So very difficult call, but I'm still going with sell calls because a lot of stocks are showing signs of breakdown, and I think there's a stronger chance of it not holding and the market continuing its decline to about levels of 16,700, 750. So ICICI Bank is BTST. And I think most of the selling is, as you were highlighting, is also coming from the financial sector. So ICICI Bank is something which I choose. 866 is the stop loss. 852 is the target for tomorrow. The other one is HDFC Limited. That's already broken to 200 average and it's still looking southward. So that's STBT with a stop at 23.20 for targets of 22.85.
Okay, all right, got that. Thanks for that, Mitesh. Well, Sudeep Bandyopadhyay joins us as well. Hi, Sudeep. A scary looking market actually. We were talking about 18,000. Suddenly we are at 17,000. All this in the matter of 7 days. But some of these, dips provide you great buying opportunities. What's your take? What are you looking to buy? What's on your shopping list?
Well, Nigel, I agree with you. I think, this correction is definitely a buying opportunity, though people may not see it like that as things stand today. There are a lot of uncertainties, of course, with the RBI policy around the corner, and there is a 50 basis point interest rate hike expected. The rupee, the way it's behaving, I think there is some pressure on the market, and FIIs have been selling off late. So all this does put pressure, but for a long-term investor's point of view, I think it's a great opportunity to buy. And I will specifically focus on the BFSI. Pretty much the entire market has been bullish on BFSI, and look at the correction BFSI has seen over the last few trading sessions. It has corrected very, very sharply from an all-time high levels in the index. About a week back, it has corrected about 3,000 points. And some of the leading names which have corrected, some of the housing finance names which have corrected, definitely are good buy. But I will still, considering the volatility in the overall global market, I will still recommend sticking to the large cap and the frontline stocks. So as far as the banks are concerned, again, I would go back to the tried and tested ICICI and SBI. I think both these post the corrections they have seen are good buy for a long-term investor's point of view. On the housing finance, I will probably go and recommend Canfin Homes. I think there was some corporate action, management change and things like that, and post that it has corrected very, very sharply. There is fundamentally, at least whatever is available in the public domain, there is nothing wrong with the company. Some diligence was carried out some time back for a proposed sale, and There was nothing, no major red flag. So this correction is definitely an opportunity of accumulating a stock like Canfin Homes.
So the price action is a little worrying, right, Sudeep? Because the correction is not today. I mean, the correction has been even when the market was surging earlier last week. And, you know, I remember talking to someone on the air. There was such positive ideas when the market was going up that something like this correcting with general understanding that not very much is wrong, you know, people have come back to buy very strongly. That did not happen. It's continuing to, maybe there are worries, something else will come out, who knows. But you're saying, as far as you can see, there's not very much fundamentally wrong, and much of the pain has been recognized. Got that. Let's just put up Westlife as well. You know, it's had a very large move today. So the intraday will tell you the low was 631, the high is 754, and it's basically somewhere in the middle now. It was up about 5% when we started the show. And now it's about 2.25% higher at this point in time. From this space, Sudeep, the QSR names, anything you like? Which one do you? We got more than a few now.
Well, I think, yes, you're right. We have more than a few, and all of them are definitely in a season now with the festivities starting, and we have the Sera, Diwali, Christmas. So it's a good season. We've seen probably the last of the COVID. So obviously the business is picking up as far as these stocks are concerned. Domino's, you know, always has been a great stock, but I still am not comfortable looking at the multiple at which it quotes. Specialty restaurants, again, there is obviously some traction back, but I'll still be a little cautious. If I have to go and buy, probably I'll still go and buy Westlife. There is definitely a lot of excitement back. Also, one can look at Varun Beverages. That's also one stock which one can look at. But there will be volatility in these counters, and if somebody is going to buy these stocks, I think it should be for the long haul. You should not expect fantastic returns in a matter of few days. But for a 1 year plus kind of a hold, both Westlife as well as Varun Beverages look good.
Okay, all right. Westlife and Varun Beverages. Any view on, you know, Varun Beverages, the other company that they have in their stable, that's Devyani International? Have you looked at that?
Well, I have looked at that, and they have been rapidly expanding the operations across the country. I think over the last couple of months or maybe 6 months, the number of stores they have added, restaurants they have added is significant. We'll have to wait and watch, you know, as and when these becomes profitable. All these new locations coming up together is good for the long run, but I think short term there will be some pain. I'll wait and watch Devyani International.
Okay, all right. Sudeep, stay with us. For the time being, we'll take that short break. But in the last few minutes, I think, you know, one of the sectors that's been outperforming has been cement. And Sambuja Cement has taken a sharp knock. It's moving towards 500 rupees odd. Remember, just around 7 sessions ago, it almost made it to around 590 rupees. So from there, it's a big downtick that we've seen, down 5.5%. Slip into a short break. You come back. We'll run you through the final 10 minutes of market trade. Not too many stocks in the green, but Metropolis Health, that's one of those stocks that is up close to 3.5%, moving to the high point of the day as the markets, you know, flirt with the low point of the day. Well, let's get some market opinion. Earlier today, we spoke to Taimur Beg, Managing Director and Chief Economist at DBS Group Research. He says currencies will come under pressure across the world, and more on the Nifty as well as on the potential rate hike. Let's hear what he had to tell us.
I think that the turbulence in the emerging markets has a long ways to go. And the fact that the Indian rupee has outperformed, or the Indian markets on a net basis this year has received flows, these are good markers to keep in mind that, you know, India may still on a relative basis do well, but on an absolute basis, there is no silver lining. We have very, very difficult fourth quarter coming for us. And whether it is the INR or you go to Indonesia, IDR, or you go to Brazil, the Brazilian currency, real, everything is going to come under pressure with this relentless rise in Fed interest rates and the extraordinary strength in the US dollar. India senior economists and I also believe that a 50 basis point hike is very much on the cards. For the RBI, you can see in their game book, you can see what they have been doing over the last month or so. They are worried about incipient inflation pressure. They're worried about the rupee depreciating on a disorderly manner, although relative to other currencies, it hasn't really depreciated that much. But those sort of things don't make a central bank comfortable. They do probably feel that real interest rates should be higher. They feel that the output gap from the COVID crisis has narrowed substantially. And it's not just a question of importing inflation. There are domestic drivers of inflation as well.
Okay, all right. Fairly cautious commentary coming out of there. Well, Sudeep, before we wind down, the sector that's getting pummeled right now is cement. Namely, one of the outperformers, that's Sambuja Cement. Almost went to around 600. Well, valuation-wise, it's still trading at a premium in comparison to what it traded in the past. But now you have a more aggressive promoter. What do you do at around 500 rupees?
Well, I think, as far as this sector is concerned, Nigel, I've been positive for some time and I maintain my positive view. I think there is significant tailwind behind the sector and this is going to continue for some more time. The new capacities which are being talked about by the Gujarat Ambuja ACC combined as well as some other manufacturers will take quite some time to come up. Till that time, I think the existing manufacturers with their capacity will enjoy a definite demand-supply benefit. And the infrastructure and construction picking up in a big way in the economy, they will have a pricing power. But as far as the market price is concerned, the way things are poised, Gujarat Ambuja ACC with a different and a strong promoter, of course, is an interesting proposition. But if somebody wants to play safe, I will still go back to the industry leader, tried and tested, Ultratech. I think current levels where Ultratech is quoting, it's an excellent buy. They also have a strong presence across the country, and they are definitely much bigger in terms of existing capacity vis-a-vis even Ambuja and ACC combined. And of course, they also have their expansion plans. So at this stage, I think I can stick my neck out and recommend a buy in Ultratech and keep a watch on Ambuja ACC.
Okay, Sudeep, thanks a lot for joining us. Have a good evening. Let's start wrapping up the market action for the day. It's very precariously poised. I must say the market is ending right at the lows of the day. I mean, you could argue that maybe on the Nifty just about 30-40 points off the lows, but when you're down 306 points, really the 30-40 points maybe do not matter much. On the Bank Nifty as well, very close to the low point of the day. And look at the market breadth today, 1:11. And the mid-cap index is ending with 3.3% cut. This is serious cut. And this is on top of what happened just with the broader market last Thursday and Friday as well. In terms of stocks, well, clearly there was a bit of an algo trade which played out. Financials were butchered. So names like HDFC Twins, ICICI, Axis, all these names, HDFC Life were down quite a bit in trade, while IT stocks were up, HCL Tech, Infosys and TCS. In fact, that was the only pocket which did well. X of that, autos were down. So Tata Motors down 6%, Maruti was down 6%, Eicher Motors as well down about close to 5%. ITC took a bit of a beating today, 4% down on that one. Adani Ports was down 6.5%. Quite a bit of slide actually towards the end in Adani. Coal India, UPL, NTPC, Mahindra, Reliance made a big move. In fact, 2.5% down. Purely in terms of contribution, that would be one of the largest that we would have seen today. Bharti Airtel, Shree Cement, all these stocks were lower. So didn't look good. No hiding place, and no hiding place in the broader market, I guess, Prashant.
Absolutely. I mean, nothing at all. 10:1, just under 10:1 in terms of declines to advances today. So, I mean, RBL Bank back at 112, just like that, 9%. Varun Beverages down 8%. India Cements down 8%. Canfin Homes down 8%. Thermax down 8%. JSW Energy down 7%. Nazara Tech back under 700, 7.5 lower. Chennai Petro down 7.5. And so many other. McLeod Russell was down 10%. Elecon Engineering down 7.5%. But volumes start to thin out. I think I've mentioned the bulk of what was down on significantly large volumes today. Nigel.
Well, that's right. Let's talk about a few gainers then. There were only 250 stocks actually that ended in the green in today's trading session. Metropolis, that was one stock that really stood out in trade today. You had Ipca Laboratories as well, that was up close around 2%. Select mid-cap tech, well, they were surprise up movers in today's trading session. All in all, the bears, they were fully in control today. The bulls tried to put in a bit of a fight, but by the end of it, well, we ended closer to around the 200 DMA odd. So the Nifty is down 300 points. The mid-cap index got pummeled, down 3.5%. The Nifty Bank as well, down close to around 900 points or thereabouts. So from more than 40,000 odd, today the Nifty Bank settled closer to around the 38,700 odd mark. Well, on that note, we'll wrap up on this edition of Closing Bell, but we'll take stock of the big market sell-off with market experts on the other side. You stay with us.